BlackRock's newest Bitcoin product launched today, and it could make an even bigger impact on the space than their IBIT ETF. Now, I know that's a bold statement considering the BlackRock IBIT ETF has scooped up over 750,000 Bitcoin over the past 2 years, but now it looks like they're getting even more bullish on Bitcoin as this new product looks like it's trying to compete with Saylor Stretch and comes only weeks before Goldman Sachs is due to launch a similar income product. It seems like the paper Bitcoin games look like they're going to live with us forever. Now, before I break down the product, we did get an interesting clip coming out of Rick Ryder, who is of BlackRock, and I think it's going to set a good tone for how bullish BlackRock actually is on Bitcoin. Now, we can debate whether they're good for Bitcoin or not, but one thing is for sure. They want to make money off Bitcoin, and that's why this new product is interesting. So let's watch a short clip, and I'll break down their latest product launch.
All against it.
One of your mutual funds, I believe, still owns a little bit of IBIT, Bitcoin, and you were one of the early people inside BlackRock to get into it.
Yeah.
It's now sold off 50%.
Yeah.
Is it a buy now, or are you going to wait more?
Wow, these are specific questions. So, listen, I think it's ultimately going considerably higher. I think the technicals, there's some technical condition around it that causes it to chop around. I think it's ultimately going higher. We're keeping it a pretty moderate exposure, quite frankly, because I think there's some other things that we talked about in technology and some of the growth engines. By the way, there are places to get yield and things like some parts of the credit markets, EM, that I felt like it's just okay today, and so we've reduced exposure. Ultimately, I think it's going higher.
Here, what happened? Oh, okay. Hey, I guess I didn't clip that well enough. So you saw there, Rick Ryder, the literal fixed income CIO at BlackRock, talking about how bullish he is on Bitcoin. He said, and I quote, "It's going considerably a lot higher," okay? And that is on the face of their latest launch, which is, of course, something that we did talk about a couple of months ago, but now it is official. So BlackRock's Bitcoin Premium Income ETF is now trading live under the ticker BITA, B-I-T-A. So going into here, let's break down exactly what this is. BlackRock launches their new Bitcoin ETF combining Bitcoin exposure with covered call income. So BlackRock, again, launched a BITA, a covered call Bitcoin fund that combines spot Bitcoin and IBIT exposure with option writing to generate monthly income while retaining most of Bitcoin's upside potential. Some interesting caveats here, right? Of course, if you've been following along on the Stretch product, that's why Stretch and SATA from Strive, Stretch from Strategy, SATA from Strive have caught on, though they've been calling it a much more, I guess, maybe mimetically digital credit. There has been a lot of recent debate over digital credit in general. I don't know if you guys are following that. I'm not going to get into those details today. But what you do need to know is that's why these products, the Stretch and SATA, have been doing so well, is because people are looking for this yield. They're looking for an income generation vehicle from Bitcoin. And as we know, Stretch has been was going pretty crazy. The last couple of weeks, maybe it's been having a little bit of trouble, though SATA did just launch their daily dividend, so it's going to be very interesting to see how this plays out. But as of now, what we can tell is that there is a lot of interest for income generation from Bitcoin. Now, as we always say in Bitcoin, if you don't understand where the yield's coming from, you are most likely the yield. So let's check where the yield is coming from. Again, BITA launched today, and you're seeing here, while selling call options on a portion of those holdings to generate monthly income for investors. Now, going further, the fund writes call options on roughly 25% to 35% of its IBIT holdings, collecting option premiums that are distributed to investors each month. The structure preserves the bulk of Bitcoin exposure, allowing participation in price appreciation while producing an income stream. A combination that BlackRock says a growing portion of its client base has requested. again, what is very interesting here, which we've been talking about in Bitcoin for a long time, and maybe you personally are a spot Bitcoin holder. Maybe you're like me. It's just like, I just buy Bitcoin. Because I don't understand these products, I just, get spot Bitcoin, take it into cold storage. I'll figure all of that stuff out later. Right now, this is the safest place for me to be. But what we have been able to see is that essentially Wall Street is not necessarily just getting into Bitcoin because they believe in Bitcoin per se. That's probably the general view here. It is looking a lot more like it's their clients looking at Bitcoin. It's the institutional retail investor that is talking to their asset managers and being like, hey, look, you said you're here to protect me from, potential fraud and all the other things you've said about Bitcoin, but you've also basically forced me to miss the best performing asset in the past 16 years. Now, since we do have a lot more regulatory, quote, clarity, the Wall Street institutions are in Bitcoin, you're starting to see a lot of Bitcoin products get launched. And now we have gotten to the next phase of Bitcoin products being launched, which is they are all competing for the best product for their clients. And now we see another avenue, another product that does exactly this. It's the client at Blackrock. It's the retail institutional investor that's talking to Blackrock and being, hey, I want Bitcoin. It's not necessarily Larry Fink out there that's like, we're going to do all these Bitcoin products because we want to, corner all of Bitcoin, et cetera. I mean, they could be talking about that in the upper echelon, in the boardrooms, but it's the clients that are forcing their hand, which is one of the things we always say. Bitcoin does have a way of changing you, of you being incentivized, or rather your greed incentivizing you to adopt Bitcoin. And now we're seeing this is playing out in real time. So again, going back here, quote, a significant segment of our client base is interested in Bitcoin, but is also highly focused on income generation, which if you've been in Bitcoin for a long time, We've heard this conversation. This has been one of the biggest FUD lines in Bitcoin forever. It's like, yeah, well, Bitcoin, doesn't produce anything. There's no income, there's no yield to it. How can we add this to our portfolio? Where's the gain? You're just waiting for the price to pump up. Well, it looks like Wall Street is trying to find ways to solve this product. Now, maybe it's going to have more cons than pros, but we'll see how this plays out. All right. So continuing, quote, BITA was built in response to that demand, enabling investors to retain the majority of the Bitcoin upside exposure while capturing potential income through a convenient exchange traded structure. A covered call strategy involves holding an asset and selling call options against a portion of that position to collect premium income. And I think this is where it gets interesting, is this next sentence, which really probably is going to make all of you guys crash out, okay? The next portion is, in sideways or mildly bullish markets, these premiums boost returns. In strong bull markets, upside on the covered portion is capped because issuers must sell at the option strike price, which does sound a bit, again, to the layman, to the financially illiterate person like myself, that one, they want the Bitcoin price to go sideways. They don't want the upside volatility per se. They don't want the explosiveness that we want. They kind of want the sideways action because that's where they make the most money from. This is where they're able to not only trade Bitcoin very easily, but also make a bunch of money. And then further, on the other side, you might look at this and think, dang, they're literally admitting that they're going to be suppressing the Bitcoin price and we're going to go sideways forever, diminishing returns. Wall Street came into Bitcoin and now we don't get the gains anymore. They're going to try to suppress the price. I think those are fair accusations to make here, but we have heard something similar from the Goldman Sachs product, and they seem to be saying something very similar, that they can make a ton of money on sideways action, but when it comes to the bullish, omega candles, that's when this product doesn't necessarily work as designed, which does make me think that, one, they are extremely bullish on Bitcoin long term. But two, they have two different products here. One, of course, the IBIT Bitcoin ETF exposure, where they get money from the gains. And then they have the BITA, which they can make gains on sideways action. So they are definitely tailoring these products for their clients. They want to make sure that their clients are able to make money in all types of markets, which, being less cynical, it's probably very good for Bitcoin in general, in terms of it maturing. If we thought Bitcoin was going to become the world reserve currency, the neutral, permissionless, censorship-resistant money of the world, we knew Wall Street was going to come. We knew they were going to play Wall Street games. If Bitcoin can't withstand Wall Street games, then it's not what we thought it was. Now, I know a lot of people, a lot more of the purists, maybe more purists than I am, will always say, I wanted Bitcoin to be peer-to-peer. And I'm like, yeah, well, you could still use Bitcoin peer-to-peer. Just because it's being used by Wall Street doesn't necessarily mean that you can't use it peer-to-peer. It doesn't take away from the peer-to-peer aspect of Bitcoin. It just means Wall Street's going to come in and try to do their Wall Street things, okay? So BITA gains its Bitcoin exposure through both a direct Bitcoin holdings and IBIT, which, of course, has accumulated over $49 billion in assets. And IBIT's option market averages $3.7 billion in daily trading volume, and, of course, ranks amongst the top 1% of all options products by that measure. The fund carries a 0.65% sponsorship fee, higher than IBIT's 0.25%, but lower than other income-generating Bitcoin ETFs, such as Round Hill's YBTC and NEOS BTCI. Of course, again, back to the idea, Wall Street, they are competing for your business. I think we are at the very beginning of seeing like a race to zero, that at a certain point, a lot of these Wall Street products will basically have no fees, or else, like, why for most people, once they understand Bitcoin, why would you charge, or why would you pay an asset manager to essentially just hold Bitcoin when there is no holding fees to spot Bitcoin? There's just a learning curve. So I think we're going to see all these rates eventually go down. As of now, of course, they're launching new products. They will see how the product market fit works out. They will see how the competition happens, and whether they're able to attract more capital than their competition. Again, Goldman Sachs is going to drop an income product, I believe it's July 1st. So, and I think that timing is very interesting. Of course, Stretch has caught on, very, very strong. It's essentially, I don't want to say it's essentially the same product, because their mechanisms are a little different, but they are using, or rather focused on, the same problem. People want to get yield. People want to get paid monthly, bi-monthly, daily. They want to get a return on this instead of just hodling Bitcoin. Now, maybe that's something that us purists aren't the biggest fan of, but Wall Street wants this. And we're seeing that Goldman Sachs is going to launch one on July 1st. So they're already competing. Now, going further, I think this is where it gets a little interesting. Who is BlackRock building this for? Now, obviously, they're probably not building it for you and I, the hardcore Simply Bitcoin audience, the super cypherpunk Bitcoiner. But if Bitcoin is going to reach everyone, then I think these products probably are going to attract a lot of capital. So Jay Jacobs, head of equity ETFs, said the fund targets three distinct investor profiles. The first group includes income-focused investors seeking returns beyond dividend stocks and bonds. The second consists of Bitcoin holders who want cash flow from a long-term position. And the third is investors who have stayed away from Bitcoin or gold because those assets produce no income on their own. That is kind of interesting. Look, again, I do not advocate to go to BlackRock to buy Bitcoin, but they're definitely marketing Bitcoin and tapping into markets and investor psychologies that historically would avoid Bitcoin. Now, maybe not with the second one, because they're already Bitcoiners and they're just looking for ways to kind of live off their Bitcoin without actually like necessarily selling the Bitcoin. But going further, quote, you could imagine this could be people who have a significant portion of their wealth in Bitcoin, but would like to have an income stream to support their lifestyle, which is one of the things a lot of Bitcoiners are trying to solve. Until we get to the point that you can use Bitcoin as money aka zero capital gains on top of it, these products will continue to build. Now, there is probably a significance to the difference of using Bitcoin as money with zero capital gains and essentially taking out maybe a loan from Ledin, one of our partners, where you actually get to keep the Bitcoin. We saw the Fannie Mae Bitcoin-backed mortgage loan where you essentially can get a house and keep your Bitcoin. It seems like BlackRock is trying to figure out a way to solve that problem as well, at least in the current framework of how traditional finance views Bitcoin. Anyways, I think trying to explain maybe what this is and how this works out, like maybe I'm talking too high level. Maybe the TradFi words are getting a little over your head, and you're like, okay, like it's a new ETF, but it's using the ETF and it's writing call options on top of it. And you're like, what exactly is a call option? Here's like a really good, simple explanation of what a call option is. And then you can start to see that, in fact, BlackRock might be even more bullish than most people is on Bitcoin, at least currently during this bear market. Okay. Right now, it does seem like BlackRock is extremely bullish on Bitcoin. Again, the IBIT Bitcoin ETF was their most successful ETF launch ever. Now they're following it up with another ETF launch. I think their actions are showing that they are, in fact, extremely bullish on Bitcoin. And right now I'm reminded of, remember a little while ago, remember when we were caught up in the fervor of going to all-time high in 2025? There was that clip going around of Larry Fink saying, I wouldn't be surprised if we go to like 700K extremely fast. I never forgot that. Anyways, here is a simple explanation, maybe almost too simple, to explain what a call option is. So suppose Bitcoin is currently trading at $70,000 and you believe it's going to go up. So you buy a call option with a $75,000 strike price that expires in 1 month, and you pay $1,000 premium. You pay basically $1,000. Now, if Bitcoin jumps to $85,000, you exercise that option and you can buy the Bitcoin at that $75,000 price. And of course, you get that difference from the 85K to the 75K minus that $1,000 premium. So you're basically saying, all right, I'm bullish on Bitcoin going up, but I don't actually just want to buy that spot Bitcoin because I want to generate some yield on this. So in that framing, in that little example, they would be now $9,000 gain with it. What it's going to cost you $1,000. Now, on the opposite side, if Bitcoin drops to 60K, then you let the option expire and you don't actually have to buy the Bitcoin at 75K. You just pay that $1,000 premium. So this is how they're going to be using call options to create a premium, or rather a yield on Bitcoin. And of course, this is going to be monthly, which does seem, again, I'm not the highest level TradFi financial trader here. I've only recently wrapped my head around how call options work, because one of my boys, he's like, yo, I think I'm just going to do a bunch of call options on Bitcoin. And at first I'm like, what even is a call option? And then he explained it to me. I'm like, oh yeah, that actually kind of sounds smart. But anyways, it does sound like they're going to be making a lot of paper Bitcoin. Now, it doesn't necessarily tell us as of now. They did say 25 to 35% of their IBIT is what they're going to be making call options on. I mean, is this essentially saying we are going to be seeing even more paper Bitcoin in the space? I mean, technically, by definition, making a contract on Bitcoin is making paper Bitcoin, but they will in fact have to buy the Bitcoin. So you're seeing they are making, fiat games on top of Bitcoin, which is necessarily, from a purist perspective, probably not your favorite thing to be watching right now. But again, we can't stop this. It is very interesting where we currently stand in Bitcoin, that we've always said Bitcoin is freedom money. And for the longest time, I've been saying like, hey, look, I am a spot Bitcoin holder. I just want to buy Bitcoin, take it into self-custody. What you do with your money, you do with your money. Obviously, we have the famous Hal Finney quote from like days after Bitcoin was launched that there will be fully reserved Bitcoin banks and there will be fractional reserve Bitcoin banks. And the market will find out sooner or later how costly it was to use a fractional reserve Bitcoin bank. I think we are pretty much in that process right now. We are living that right now. And it's just interesting that in the last year or so, one of the biggest conversations is how you should use Bitcoin. And it does, in my opinion, kind of counter or go contrary to the libertarian ideals that most people talk about. It's like, hey, man, you know, do what you want, but like, don't tread on me, bro. It's just, hey, it's interesting to watch, all right? But put it another way, when I first heard this story, when I first saw this breakout this morning, my initial thought was like, wow, they're going to return. I saw that the yield that they are kind of promising right now is between 15 and 25%. Before I really read into the call options technicals, details about this, I was like, yo, I think Blackrock is even more bullish than Michael Saylor. You know, Michael Saylor is returning 12.5% bi-monthly. All he really needs is Bitcoin to go up more, it's 11.5%. All Saylor really is saying is, hey, if Bitcoin goes up 12 to 20%, then I will be able to pay these stretch dividends forever. And when I first saw this, I didn't really read the headline. I was like, yo, is BlackRock basically saying that they think Bitcoin's CAGR is going to be more than 25% a year? I'm like, yo, they're even more bullish than you are. Like, they're more bullish than Nico is. Like, they're more bullish than most Bitcoiners right now. And then you read into it, and it's like, no, they think that they can make 25 to 35%, essentially trading the chop on Bitcoin. Now, we all know that that's probably not the smartest move, but I have been hearing a lot of rumors that the big banks have in fact already been doing this. Hence why I think we've been chopping since October of 2025, or rather put even further back, hence why we've been chopping all of 2025. These games have been playing. I know we've been trying, and we always look at a big bad boogeyman in Bitcoin, someone that's suppressing the price. But we, in fact, know, at least now, it's official, it's confirmed, that the hedge funds are, in fact, trading the sideways and think that they can make 25 to 35% gains on top of Bitcoin. They are essentially incentivized to keep Bitcoin in a tight range because they can trade that chop very, very good. And they're about to drop products for this. Now, these products don't necessarily work as well once Bitcoin starts ripping, as I mentioned earlier. If Bitcoin goes in a very short time from 75K to 100K, then this product doesn't necessarily bring the gains that they want because they like to trade that chop. It does, as been stated, cap the upside for the investor, which goes into this idea that they do have the IBIT ETF where, hey, if Bitcoin runs, the clients are going to be happy. And then they have the sideways chop product, which is this new bid up. And we see Goldman Sachs is about to drop this product. You know, read between the lines. Essentially, they've been doing this already, or else they would not have dropped this product, okay? Which I don't want to lean into they're suppressing Bitcoin price, but I mean, look. Layman view, 42 IQ view of this is like, maybe this is what we've all been feeling since the IBIT ETF was launched, that something does feel different, that the price has been reacting a little different. There's something that we can't fully explain that is fundamentally shifting how Bitcoin works right now. It does, for lack of better terms, seem as if Bitcoin has been tamed since 2024. And now we can essentially pinpoint where this is happening. We had the Jane Street saga. Now we have call option saga. Who knows how much call options BlackRock has been doing. Now we have some on-chain metric. Well, rather, you know, I would say off-chain, but we have an ETF that is going to show this. Next week, we will be able to essentially track how much capital is going into the Goldman Sachs similar product, income product. We're starting to be able to see where the call options are coming from. And of course, you gotta venture to guess that they've been doing put options as well, which is just the reverse. It's basically the short version of this. Short as in shorting the market, not short version as in like short bus. Okay. So anyways, I think the big takeaway here is, one, Wall Street is definitely creating products and competing for client and business. Two, they are extremely bullish on the long-term potential of Bitcoin. And three, of course, they are extremely bullish on the Bitcoin price going up as well. Now, maybe they are more excited about Bitcoin having this slow grind up versus what we all want, which is like the classic 4-year cycle meme where it's like you're the dumbest person in your family that's trading Bitcoin for 3 years. And then we have about 21 days where Bitcoin goes absolutely insane, blows everything out of the water. And then of course it kind of comes back. Well, now we know for a fact that the Wall Street games have been played to essentially dampen the upside of Bitcoin. At a certain point, that mechanism will break. Or else is Bitcoin really what we thought it was? I think what we've been saying, and shouts out to the Bugles for really doubling down on this meme. I think we have been living through paper Bitcoin eternal summer here. And if we're looking at the on-chain data, there isn't that much trading volume. Again, we've all watched it. Look, guys, have you seen what's going on with SpaceX? It's sort of like, the IPO is crazy. Everyone's chasing the SpaceX IPO. Everyone's been chasing AI stocks. Last year, people were chasing gold. Everyone is chasing the S&P 500, the QQQ, the Dow Jones. Bitcoin right now has lost its luster to a lot of people. But at a certain point, we'll be back. We will be back, guys. We will make our gains. We will. No hopium. We are in the desert. Yeah, dude. 40 years in the desert right now. Minimum, dude. It's biblical. Imagine what. Yeah, with the alien. That's a good one. Florida swamp monkey. Let me see. That just means it's early for Bitcoin then, buddy. Yeah, 100%. Anyways, I see some of the guys that watch the show constantly that are negative Bitcoin. But look, don't trust me, a YouTuber. The biggest asset managers in the world, the biggest banks in the world are bullish on Bitcoin long term. Yes, maybe they think that they can suppress the Bitcoin price. They could, for lack of a better term, maybe a less aggressive word, tame the Bitcoin price action, have a more slow, gradual grind versus what we all know and love about Bitcoin. But they're not saying Bitcoin's going to zero. Wall Street doesn't get into something if they don't think it's going to have a long-term potential, because they're not going to put their reputation on the line to trade something like that because they don't want to hurt their clients. Rather, put another way, they don't want to hurt their reputation. You cannot endorse something and then it blows up because it's a Ponzi, like everyone that hates Bitcoin says, and you put your rubber stamp of approval on that because that makes you look bad. Bitcoin's not going away. Yes, it's been boring. Yes, we're all bored. Yes, we're in the peak of a bear market, but it's here to stay. If you watch Bitcoin content and you're in the chat every single day just hating on Bitcoin, bro, okay, Peter Schiff, like, have fun staying poor. What are we talking about? Why would you watch something that you think is going to zero and you're like, I'm here to save someone. I'm here to save the chat from getting slaughtered. It's like, yo, you remember Peter Schiff has been doing that, and it's not really working out in terms of the gains. You're better off just joining Bitcoin than fighting Bitcoin. It's literally what Satoshi said in the very beginning, that the incentive structure of Bitcoin is so aligned that you're better off just joining the network than fighting the network. And here we are, 17 years in, and people still just don't get it. It's so interesting. Everything great about Bitcoin comes from shill talk. That's it. I would say that everything great about Bitcoin comes from the network itself. The shill talk is just so people can understand that. I am a Bitcoin propagandist at the very end of the day. I love Bitcoin. I have bet my whole life on Bitcoin. Yeah, I am a shill. I wear that, that on my sleeve. I wear my heart on my sleeve. I think everyone should be holding Bitcoin. But that's because of the nature of the blockchain. That's because I don't want to say the intrinsic value of Bitcoin, because I don't necessarily believe in intrinsic value, but that comes from the properties of Bitcoin that have allowed it to last for 17 years and accrue $1.3 trillion of value. Got as high as $2 trillion. I just find it interesting. Wall Street pumps shitty stocks and companies. That's true, but those are like the penny stocks, We're not talking of Wolf of Wall Street here, okay? We're not talking Wolf of Wall Street. We're talking about the big names, We're talking about the big names. Dude, it does have augmented reality. I see things that aren't there anymore. Okay, anyways. You're the anti-shift. All right, guys, let's keep it moving. We're going to, I've been loving my boy, James Check, a.k.a. Checkmatey. He's been making some really good clips in terms of maybe what you should be doing right now, the investor psychology, what we're seeing currently in the market. So I got a new clip. I'm blanking on where it was, so let me give a shout out to you. Oh, this is on our boy Walker's. This is on our boy Walker's podcast. And then in the news, I am going to take a little different angle here today. We're seeing some very interesting stuff come out of Japan, the Bank of Japan, and the yen carry trade. We've gotten to a new era, but that's also connecting to tomorrow. We are going to have a new era at the Federal Reserve with Kevin Warsh. I think the timing is very interesting, especially in the face of what we're seeing with the SpaceX IPO. Essentially, what I would say is maybe right now is not the time to start FOMOing and buying Pico tops on some of this other stuff. I would wait, sit on your hands for 24 to 48 hours before you make any drastic decisions right now, because we are seeing some very interesting things happen in the macro markets right now. And then later on in the show, we do have our boy Luke DeWolf joining us at 1:30. Oh, actually sooner than I thought. I went way too long. All right, I need to keep it going because I hope I can get to the Bank of Japan stuff. If not, I'll save it for tomorrow. Back after the commercial break. Here's the part that nobody says out loud. Buying Bitcoin on an exchange and leaving it there isn't buying Bitcoin. It's buying an IOU. And the last decade has been a masterclass in what happens when those exchanges don't deliver on their promises.
Bitcoin Well is a self-custody Bitcoin platform. That means that when you buy Bitcoin, it goes straight to your self-custody Bitcoin wallet. You actually own it from the very first transaction. They're available both in the United States and Canada. Pricing is transparent, straightforward, and no nonsense. And if you're buying a larger amount of Bitcoin, Bitcoin Well Infinite gives you concierge-level support through a dedicated executive Bitcoin advisor, premium help for when it actually matters.
You can also stack a little extra through the referral and wishing well rewards. A nice bonus on top of the owning your own Bitcoin thing. So go to bitcoinwell.com/simply and sign up for the Bitcoin Well portal today and buy Bitcoin you actually own. Paper burns, paper floods, paper fades. If your seed phrase is written on paper, it's not really backed up. It's waiting to disappear. Stampseed's DIY kit lets you hammer your seed words directly into commercial grade titanium. Fireproof, crush-proof, waterproof, and permanent. Once your words are in the metal, they aren't going anywhere. Use code SIMPLY at stampseed.com for 15% off anything in the store. That's stampseed.com, code SIMPLY. Okay, guys. The current Bitcoin price is 65,730. We did get a little pullback last night, but not that bad, all right? The discount from all-time high is 47.9%. The market cap is 1.32 trillion. You know what's crazy? If you've been watching the SpaceX IPO, Elon Musk is currently himself worth more than the entire Bitcoin network. So either we are all complete idiots and the Bitcoin haters in the chat are right, and it's a giant Ponzi and it's over, or Bitcoin is so undervalued that it's going to rip. I don't know. I've taken my bet, but SpaceX IPO is actually crazy. You know what's even crazier about that? SpaceX IPO is ripping because no one can actually sell it right now because of the lockup period for the IPO. When that selling lockup period happens, it might get brutal, all right? So again, maybe sit on your hands here before you start chasing the SpaceX top. But going further, the block height is 953,979. Okay. So as I was saying, look, we are in a bear market. Are we closer to the end than the beginning? I would argue yes. But I have been having a lot of friends ask me currently, like, what should I be doing? And I say the same thing. Just buy continuously, you know, whether it's every month or every other week, or if you have enough money, buy it every day. If you buy it right now, you'll probably be pretty happy in a year or two or 10 or whatever. You'll look back at these times and be like, that was the best time to buy Bitcoin. I think where we currently stand right now with the current Bitcoin price, I don't think the problem is going to necessarily be that Bitcoin going up, that you're not happy about it. It's not that you're worried about the price going lower and you miss, you know, what, 10, maybe 20% off the top or off your gains. I think where we stand right now, you're probably going to look back at these times and kick yourself and be like, I should have gone harder. I shouldn't have waited for the 40K or 50 something K bottom. I should have just continuously bought Bitcoin. I think that's going to be the prevailing sentiment for a lot of us, that look, we didn't go as hard when we had this 60K opportunity. And my boy James Check, aka Checkmatey, is saying something very similar. So let's check it out.
We're in the bottom 10th of the cycle. Do you regret buying in the bottom 10th of any cycle? No. How long are we down here for? 10% of all days. But let's just imagine that you want a lump sum. Is there that much of a difference, like trying, and the mental anguish, by the way, the mental anguish of trying to time the bottom, and every relief rally, you're worried, shit, did I just miss it? Should I lump sum now? And like you end up making mistakes because you're trying to do something that is impractical. If you just go to a level that is not quite the bottom, but it's like in the bottom zone, if you do a DCA campaign for like 5-6 months, your cost base is like 10% different to if you tried to lump sum the bottom, right? Without all the mental stress and the mental anguish. You just run a 6-month DCA campaign and just like let it run. And you end up getting a cost base across all the previous bears that is as good. It is as good. So just like zooming out, so like I've been saying, for very simple, just buy the bottom fifth, right? Which is below 68K, 70K, 68. That's the bottom fifth of the cycle. Below 60K is the bottom 10th. It's just beautiful. What are you doing? Like, don't stress out about trying to pick Pico bottoms. We don't have to get to 55. My current thesis is that, like, fundamentally speaking, the realized price is 54K. We do belong above that. Now, the market doesn't give a rat's ass where we belong based on my opinion, doesn't care less. There's no reason we have to stay above 54K. But in my view, we don't belong below 54K.
I would agree. I would fundamentally agree. I mean, wasn't I saying this the other day when I was kind of talking about where I think we currently are? I'm like, maybe. And Galaxy Research also kind of backed up the same view that maybe 54, 52K is where we finally bottom out. I'm still kind of of the opinion that 60K was the bottom. I'm holding on to that one. Though, I have been seeing the wick-off accumulation charts rear their head again. They're coming back. And I'm coming back to being a wick-off accumulation maxi, which is kind of showing that we might have a gradual climb up to maybe the 70s or whatever, and then we'll have one final shakeout, and then we're off to the races. And this could play out towards, you know, mid-July, but by August is when we're going to start climbing up again. I'm a wick off accumulation maxi right now. I'm convinced by the chart crimes that that is what's going on, that we could potentially see one more drop. But the point remains the same. What should you be doing right now if you believe in Bitcoin? If you think Bitcoin's going to $1 million+ by 2030 or whatever your craziest price predictions are you really going to care about, like, you didn't actually buy the exact bottom? Like, realistically, you won't. Yeah, we all want to buy the exact bottom, and we would love to lump sum all of our fiat, capitulate our fiat all at the exact bottom. But right now, for most people don't even have any fiat on this timeline. You just need to make sure that you continuously buy Bitcoin. Just do what we've all done in the past. This is the advice from basically every Bitcoiner, is just do what we have done in the past and just buy on a certain schedule. DCA this, whether it's every 2 weeks when you get paid, whether it's at the end of the month when you realize how much money you have left over. Just set it and forget it. And make sure you keep buying. I think the biggest mistake a lot of people make, and a lot of my friends, when I talk to them, they really do, and even no coiners, people that look at Bitcoin and like, look, what if I put $1,000 right now and it goes to all-time high, I'm only going to make $2,000. That's not going to make me rich. And it's like, yeah, well, no one is actually saying that you're going to put $1,000 in Bitcoin and you're going to be a mega millionaire. What we're saying is, if you continuously save in Bitcoin as the best store of value, the best savings vehicle, that you will have a bigger nest egg. But you need to continuously save in it. Now, maybe the conversation is a little different if you're like, all right, I'm going to smash by, $2 million, $4 million of Bitcoin. And yeah, 100% on that. Yeah, 2 to 4 or 4 from 8, et cetera, et cetera, et cetera. You get that. Now that probably makes a lot more sense for most people. At least if you're rich. It's like, yeah, I can double my gains, turn a couple million into a couple more million. That sounds awesome. But I'm guessing that most of us that watch this show that are of the same kind of, average means that most of us Bitcoiners come from, you don't have a couple of million lying around. So just continuously DCA. I might be of a little bit of a different disagreement with Checkmatey here. I don't know if it's going to be for 6 months. That's kind of like the big argument now is it, will Bitcoin turn around by October, or are we starting to grind up, or do we have one more drop and then we're going up and we'll probably be off to the races around August? I think everyone at this point has agreed that we are in a bear market, and we don't know when it's going to end. Some of us are of the opinion it's going to end sooner than later, but we are all essentially in agreement that we are closer to the bottom than most people probably believe, and you probably shouldn't be stressing out too much. Just either tune out, come hang out with us on Bitcoin, go out, or Simply Bitcoin, go outside, enjoy life, but make sure you are accumulating the coin. Make sure you are accumulating the corn. Okay, guys. All right, let me see. What time is it? All right, forgive me, guys. I think I'm going to do the double ads, and I'll wait for Luke to pop in because I got 5 minutes. I can't really hit on the Bank of Japan right now. All I'll say is that we are in very interesting times. I think we might be seeing some more macro, I don't want to say necessarily headwinds, but it does seem like the yen carry unwind is going to continue. Just to give you kind of the basics, the Bank of Japan has rose rates to 1%, first time since 1995. So maybe tomorrow will be a better day to talk about that, considering that we are going to get the Fed minutes meeting tomorrow, or the FOMC meeting tomorrow. And it's going to be the first one for Kevin Warsh. Of course, Jerome Powell's out at chair. Now we have Warsh who's in. Everyone's going to be watching on pins and needles whether we get a cut or it's going to be the same, or worst case scenario, we get a rate or a rate hike. I think I'm kind of of the opinion it's either going to stay the same. I'm leaning more towards it's going to stay the same, maybe a cut. But I think I'll cover that tomorrow, considering that it is kind of central bank themed. And I don't really have the time right now. I kind of went a little longer than I thought. Here we go. Okay, Luke's here. All right, guys. So I'm gonna double the ads up, and then me and Luke are gonna chat about defending Bitcoin, what you need to do, what are the biggest attack vectors for you personally and Bitcoin at large. So I will be right back.
I want to give a shout out to our partner, Ledin. Here's something most Bitcoin holders never figure out until it's too late. You're sitting on wealth you can't touch without selling. Ledin fixes that. Bitcoin-backed loans. You keep your stack, you get cash. And they just introduced their lowest rates ever. No complexity, no fine print. The larger the loan, the lower the rate. These new rates apply to all new loans, refinances, and renewals. You'll see all the rates up front before you apply. The new, lower rates come with Ledin's gold standard protection. Your Bitcoin remains custodied and is never lent out for interest. Perfect 8-year track record of keeping clients' assets safe. Auto top-ups, LTV alerts, and partial repayments to keep you in control. Repay whenever you want with zero penalties or monthly payments. Ledin's perfect $10 billion track record through every market cycle in the last 8 years speaks for itself. Don't choose between a great rate and the safety of your Bitcoin. Get both at Ledin. If you ever thought, what happens to my Bitcoin if something happens to me? Or what happens if I lose my phone? You're not alone. For a lot of people, the biggest barrier to self-custody isn't buying Bitcoin. It's the fear of making a mistake. And that's why I like Bitkey, and I recommend it to my friends and family. Bitkey is a Bitcoin wallet built for real life. Not just for day one, but for everything that happens in between. Lost devices, upgrades, accidents, and long-term ownership. There's no seed phrase to write down and worry about losing. And no single point of failure that can lock you out of your Bitcoin forever. What really stands out about Bitkey is the peace of mind. Recovery is built in. Inheritance is built in. It's a complete self-custody system built by the team behind Square and Cash App, designed to make holding your own Bitcoin simpler and safer. Take self-custody of your Bitcoin today using Bitkey. Go to bitkey.world and use promo code SIMPLY for 10% off your new Bitkey. That's bitkey.world, promo code SIMPLY. I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy across 3 continents, HIVE runs dual engines, Bitcoin mining and AI compute. Their AI platform is ranked #1 in the world for network performance, and it's doing something bigger than compute. It's accelerating human discovery, the science, the breakthroughs, pushing humanity further and faster. Listed on the NASDAQ with the ticker HIVE. Catch the latest buzz at HIVE Digital Tech on X or hivedigitaltech.com.
Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, cell towers can fail. Hurricanes, cyber attacks, blackouts, most people go dark. Satellite phones don't rely on local infrastructure. With Iridium, 77 satellites in orbit, you can stay connected across the U.S., even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123 also has Starlink, battery backups, Faraday bags for your hardware wallets, and everything you need to build your own off-grid Bitcoin citadel. Go to sat123.com/simply and use promo code SIMPLY for 15% off anything in the store. All right, Luke. Good to see you again, bro. Sorry about that. I hit the ad so we can just keep the conversation going and do a long interview. First of all, it seems like you can hear me. Can I hear you? How you doing?
All right. I hope you can hear me.
All right. You're good. You're good, bro. Okay. So Luke, man, you just launched this book, Defending Bitcoin. Actually, let me pull it up for everyone so that they can see it and see the website. Guys, go look. We're gonna talk about this, but defendingbitcoin.com. So, Luke, you just dropped this book and you're breaking down the real threat landscape for Bitcoiners. So, in your opinion, or rather what the book lays out, what are the biggest risks right now that Bitcoiners should actually prioritize? Like, what is the big takeaway for the audience that you want to highlight?
Absolutely. The biggest takeaway I want to highlight is that there's always something you can do to improve your Bitcoin security, no matter what the aspect of the Bitcoin security landscape is that we're talking about. There are 10 threat chapters throughout Defending Bitcoin. It's a big book, 450 pages. And yeah, 10 threat chapters. And in every single one, I go through concrete steps that you can do to reduce the likelihood or reduce the impact of something bad happening. So that's takeaway number one. The second thing is that the most important thing for the individual is securing your own Bitcoin, right? So I take you through the three-step process to securing your own Bitcoin. The first thing is take your coins off exchanges. So I go through all the risks of holding your coins on an exchange. And then the next step for that is how do you secure your Bitcoin properly? So there's a hefty chapter on how you do that in the right way. Every chapter is also arranged in terms of things you should do right away to get started, things you can do to go further to make your setup a little more secure, and then finally the advanced things that you can do if you're either inclined to do the most security possible, or maybe you have a lot of Bitcoin, or an advanced setup, something like this. So and then finally, a really important thing is your privacy, right? Privacy might get a bit overlooked, and making sure that you're private both on chain and out in the world is hugely important for keeping yourself secure and making sure that bad people, whether that's say someone with a $5 wrench or $10 wrench, there's inflation, or say someone who wants to track where your Bitcoin is going and maybe make you pay taxes or something like this. That's the big thing that privacy gets you. So I take you through all that, but there's way more. There's way more in the book covering the entire network, political, regulatory threats, quantum, and AI. But if I'm prioritizing one thing, it's your privacy.
Yeah, I would totally agree with that. Now, one of the things that, of course, for new Bitcoiners, people that maybe are just, quote, getting Bitcoin exposure, they've left Bitcoin on exchanges, one of the things you usually hear, maybe they're just not familiar with what taking self-custody of their Bitcoin means, but usually you get to this sounds too hard for me. So maybe if there is some new people here that still have Bitcoin on exchanges, even though we say every single day, take your Bitcoin off exchanges, what would you tell the newcomer to Bitcoin about taking their Bitcoin off exchanges? Is it that scary? Like, what are the best practices? So people do get a little bit of actionable advice. Maybe if you've been around for a while, guys, this might be a little elementary, but just in case there's some new people out there, what would you recommend to someone that just bought Bitcoin but left it on an exchange? Like, how would you walk them through that?
Well, look, the thing is, we in the Bitcoin community might be familiar with the risk of leaving things on exchange. But for a new person, you never know when an exchange could have an issue and collapse. There was the Quadriga CX case a few years back where the founder just died and all of the private keys were gone and all the funds were gone. There was the FTX collapse that was in the news, I think, and that made big waves. And so you never know when your exchange can go down and you're the one left holding the bag. The other thing too is that you can get your account frozen, which if someone thinks that you're doing things wrong with your Bitcoin, or a government says that, hey, this person needs to pay off, something like this, you get your accounts frozen, your funds frozen, something like this. So exchanges are just always a risk to deal with. It's a trusted third party. It's just like a bank to a certain extent, except without the same type of regulation, right? And then at the end of the day, the scariest part is the first time you take self custody. How do you do it? What's the method of doing that? And I'll say it is scary the first time. I don't want to shy away from that. You do have to take responsibility for your Bitcoin yourself. But the thing is, a hardware wallet is one of the easiest things to purchase these days. Make sure to be careful about that, though. Don't just go on, say, Amazon or eBay and pick up the cheapest one you can find. You want to use a trusted source. And so, I mean, I heard you BitKey is one option, Cold Card, Blockstream, Jade, Bitbox. There are a whole ton of reputable Bitcoin hardware wallets. Now, I recommend one that gives you the option of having a Bitcoin-only firmware, because the thing about that is it reduces the potential for extra bugs from the extra code. So aim for that. You can go with, say, a Trezor or a Ledger, but For example, Ledger was hacked a while back, and the records of all of their customers were leaked. And so I'm not super confident on the security practices of Ledger specifically, but it's not about the brand exactly. It's just about the reputation. So do a little bit of research. One of the key things is to be able to take a backup of your keys, because the thing with taking self custody is that if you lose your private key, that Bitcoin is gone. And so when before you send your Bitcoin to a hardware wallet, make sure that you take the backup through the mechanism that you're walked through. Bitbox, as an example, makes it pretty easy by just having the backup on an SD card, but most would get you to write down 12 or 24 words, and make sure you do that and check it over. So you do need a little bit of time, you do need a little bit of money in order to take self custody into a hardware wallet. Now, a middle ground will be taking your Bitcoin onto, say, a wallet that's on your phone, and but you can still do the same backup procedure. I'm really liking, for example, a Bull wallet. The cool thing about that is they have a new backup method that's a lot easier and doesn't take nearly as much time, and it's still fully within your control. So the main things to keep in mind are just use a reputable provider. And the reason I mentioned the Amazon and eBay is that scammers can actually put fake hardware wallets on there. And well, the short of it is those are going to try to steal your Bitcoin if you send any funds there. So don't do that. Buy direct from the manufacturer, or even better yet, buy from, say, a Bitcoin conference where the manufacturer has a booth there, and you can get it directly from their hands, so to say. So those would be ways that you can minimize any kind of issues with taking self custody. But just take the time to do it. This is you taking your money into your hands, and you taking your own freedom and sovereignty into your hands. So spend a little time getting getting to know your hardware wallet before you send the funds. Maybe you even want to only send a little bit to start a test transaction. That's always okay. Maybe you even trust your exchange to have better security than you. But the thing is, who knows when the next FTX is going to happen, right? So there's a catch no matter what you do. But my recommendation is to take self custody and just take the time to do it properly. An hour or two. That's all.
Yeah, I've been telling everyone right now, since we are in the peak of a bear market, I'm like, maybe it's the time now for you to go back to your self-custody setup. We're all bored about the price right now. It's probably the best time to go back and do that again if you already did it, or going further like you're talking about. If you've never done it, instead of focusing necessarily on what the price of Bitcoin is going to do, maybe right now is the time where you actually secure that Bitcoin. But Luke, I do want to pivot this a little bit. So obviously this last year, there has been a lot of talk in terms of privacy in Bitcoin, and of course, privacy coins, in particular, Zcash. Everyone was shilling Zcash and all that stuff. So from your perspective, that you just did all the research, what is the latest on Bitcoin privacy? Like, from my perspective, I think it's still extremely difficult to be like as private as possible if you are doing something that is on like the nation state level. If you're a nation state attack vector person doing things that they don't like, it's probably extremely difficult. But for just the average person, what do you think people can do? And maybe just in general, what is the state of privacy on Bitcoin currently?
Sure. Well, I just want to double click on what you said with the nation state attacker. And I've structured defending Bitcoin exactly from that perspective, that you tailor the controls to the threats you're facing. And the framework that I've built is based on industrial control level security, the security that powers factories and pipelines and electrical grids. This is what I've been working on for the last decade plus, my entire career. And so I applied that to Bitcoin. And the thing is, we tailor everything to casual attackers, attackers that have some skill set and motivation, and then going even all the way to the level of the nation state attackers, organized crime, things like that. You might be surprised that nation states are really going after your Bitcoin. North Korea, in particular, is really going after people's Bitcoin with all of these Telegram scams that are going on right now. So you really have to be careful. But the thing is, most of those are not going to be targeting, say, an individual pleb, for example. But if you're higher profile, then you might get on their radar. So just want to say that's exactly the right framing, and you should tailor your security setup for exactly what you think you're facing, your particular personal threat model, something like this. But okay, privacy. The The landscape here is a little bit mixed. I mean, Bitcoin isn't a privacy coin. Bitcoin decided to prioritize security and decentralization over privacy as a protocol level feature. And every other coin that's tried to be a privacy coin has sacrificed some aspect of security, of decentralization, something like this. And Zcash in particular, we just saw a major bug where someone was able to effectively inflate the supply of Zcash to unlimited. We have no idea if anyone did it, but it was entirely possible for multiple years. And this was their so-called private feature, right? Now, Bitcoin is entirely auditable, right? Everything's out there in the open. But the good thing is it's pseudonymous, right? It's not anonymous, but it's pseudonymous. In other words, there's no names attached to the UTX, that was unspent transaction outputs. It's not like Ethereum that has an account, right? An account that you're tied to and everything, and all the transactions in and out are tied to that so-called identity. You can stay private on Bitcoin if no one attaches your name to it, right? So the first thing is, if you're with a KYC exchange, which is the majority, the majority do a know your customer setup, just know that when you send your Bitcoin out to it, that they likely have that address. Now, are they going to be sending that address to governments or tax authorities? Well, not necessarily, but there are regulations that are coming through. I was just at BTC Prague, and there was a fantastic presentation by Francis Pouy out of Bull, who went through the DAC 8 legislation in Europe. Now, this might not, for Americans, this might not seem like the biggest deal, but this is something where all exchanges have to share tons of information with each other, and it creates a big honeypot that an attacker could get, it could leak, and tax authorities are sharing all this information with each other too. So yeah, it's not a good situation, right? And so you should just assume that if you have KYC Bitcoin and you send it out to the Bitcoin main chain, that eventually some government or whoever is going to be able to know about that. Now the good thing is there are ways to break this chain. There are things like CoinJoin. I'm a big fan of CoinJoin. The main protocol for that right now is the Wabi Sabi protocol. This used to be the Wasabi wallet. And this is after the Samurai wallet unfortunately got arrested and shut down. The developers are still in prison, unfortunately. And the Wasabi wallet also shut down basically its coordination service for its CoinJoin, but it's still going on. There are coordinators putting CoinJoin together, and this is where you mix your coins with a bunch of different other people. Now the good thing about that is if you do this enough times, your coins are definitely private. Like the links between these coins is going to be extremely low. But the issue is CoinJoin is like a bright red alarm that hey, this person is being using CoinJoin, right? So some exchanges and some other things don't enjoy that. You can also use Lightning. You can also send your coins out via Lightning. Now that's a great way to be private. And if an exchange lets you do that, you really should go out via Lightning because Lightning has a lot more features that enable privacy. Liquid is another great option too. I would say that's the kind of holy trinity here. Use Lightning and Liquid, not on top of say CoinJoin, something like this. Liquid, you can use bolts swaps. This is the one service that is doing this. That lets you swap between Lightning, Liquid, and the main chain. And in doing that, you can keep yourself pretty private. So that this might sound like a lot of complicated stuff, but if you just use a wallet like Aqua or Bull or something like this, they've got these swaps built in. And the good thing too is that they're also self-custodial. These wallets, Liquid is self-custodial in the same way Bitcoin is. So you do have to trust this Liquid Federation, but I think the picture for privacy is that it's pretty good, and that these chain analysis firms can only go so far. Another great thing you can do is just buy Bitcoin peer to peer. The easiest way to do that, I would say, is just find someone in your local area who you can connect with, and hopefully someone you trust. It's better not to meet random people to buy Bitcoin from them, but connect with people in your local area and buy Bitcoin peer to peer, and no one is linking that to your identity. So that's some of the ways you can stay private in sort of an on-chain way. Now that there are other things to consider. Privacy isn't just about Bitcoin. Privacy is about keeping your location secret, keeping your identity secret. I'd like to plug another great book that just came out right now, Max Hillebrandt's Praxeology of Privacy. It's an entire book about merging Austrian economics and practical ways that you can do privacy. It's even bigger than my book. Yeah, it's really, really good. Yeah, like over 500 pages, and he had to cut 90 pages
Wow.
from the book. I know firsthand. So he really did his homework and teaches you how to be private. So my chapter 8 on privacy is like a distilled version of his book, or at least borrows quite heavily. So that's what I would recommend taking a look at.
Awesome. Quick question before I continue going on. For a lot of times, people were saying like privacy in terms of maybe not getting caught up under chain analysis. Do you think that the 3-hop rule in from wallet to wallet, your 3-hop address rule, do you think that's outdated advice at this point? It's just better to go into, say, Lightning or Liquid, or like you said, coin joins and stuff. Would you still say that maybe the 3-hop rule is okay, but there's better ways to do this?
Sure. Well, I mean, even 1 hop is actually enough to get most exchanges to lower the risk level of your coins so that they'll accept them. So 3 hops is pretty good, but definitely the thing there is that whenever you do kind of this hop, the self transfer stuff, you are saying that you are just simply transferring your Bitcoin to one spot. So breaking them into other UTXOs is one option, or looking like you're making a payment. Pay join is a cool feature where you and another person, you look like you're just making a payment, but you actually mix your coins up a little bit. So a mixture of everything. A concept from defending Bitcoin that I repeat all the time is defense in depth. So the idea here is that you don't trust on any one control to have your security there, right? You don't want a single point of failure. And that's the same thing with privacy. With privacy, you want multiple layers of defense. So combine the Lightning, combine the coin join. Make sure to never reuse addresses. I should have mentioned that earlier. Never, never, never reuse an address. That just means that the entire history of both of those UTXOs is permanently tied. It's really hard to get rid of that. So never reuse an address. Just always keep creating a new one. You can create as many as you want. It's free. So a combination. That's the
Okay. I love that. That's actionable advice. Okay. So defending Bitcoin isn't just necessarily about defending your Bitcoin, but the broader defending Bitcoin, the network. And one of the things that you've been arguing is that Bitcoin is becoming truly critical infrastructure. So what does that mean for the responsibilities of the protocol level of Bitcoin? And how can the audience, a regular Bitcoin can contribute to hardening that critical infrastructure angle of Bitcoin? Because I feel like a lot of Bitcoiners, and sometimes even myself, I'm like, I'm not a dev. What can I do really? I run a node, but let's start with how, in your opinion, has Bitcoin become a truly critical infrastructure at this point?
Well, there we go. That's a great question. So critical infrastructure is usually formally defined as those systems and processes that are essential for society to continue functioning in a smooth way, right? So every country has a different definition. I use one from the US in defending Bitcoin. I'm not going to rattle off the 16 or 22. I forget exactly how many industries are listed there, but you can find it in the book. But the thing is, this is things like energy, factories that are making critical things, food production, telecommunications, and then payment systems, right? So Bitcoin absolutely falls under a payment system, and that payment systems like Visa and Mastercard, they fail more often than you think. Individual banks have outages all the time where you can't use your specific bank card, but Visa has had hours-long outages in the last few years, where the entire network in a whole region goes down, for example. And the payment systems also take a long time to fully settle, right? And so the thing there is that there's just a lot of steps that can go wrong within that process. Usually they're able to settle up and fix the problem, but yeah. So payment systems are considered critical infrastructure by virtually every country that I know of, and so Bitcoin falls under that particular umbrella. But the next thing is that Bitcoin is increasingly getting tied up in the energy system, right? With Bitcoin mining. And Bitcoin mining, it does a lot of things other than just simply produce block space and enhance the security of the network. Bitcoin mining is connected to demand response. That was big in Texas, especially when there were those storms a few years ago. But it's also becoming a huge thing for, say, powering renewable resources for renewable energy for in places that don't have any other form of electricity. Gridless is a fantastic example from Africa, where they go and basically build out electricity in remote villages in Africa that wouldn't be able to get it otherwise through renewable energy, something like this, completely off grid, which is cool. And then the other thing too is that it's getting tied up with these data centers, right? There are a bunch of big miners that are doing both AI and Bitcoin, and they're using the Bitcoin as demand response for their AI data center to keep their loaded and even level. And I mean the energy demands of these compute systems is vastly outpacing the ability to generate and connect to the grid, and so Bitcoin is helping with that. It's getting just increasingly tied up to the energy systems all over the world, and it would be felt if it were suddenly gone, right? So yeah, Bitcoin is increasingly becoming critical, and what this means is that the system itself needs to keep going. That's the cybersecurity angle that's a little bit different than everything else. Other systems are more concerned with keeping data confidential or making sure it doesn't get tampered with, but critical systems just need to stay running. That's the whole point. And Bitcoin just needs to keep running. Tick-tock, next block. You know what I mean? And so the whole thing with defending Bitcoin is that I've framed it from the angle of keeping the system going, keeping your Bitcoin secure, keeping your Bitcoin available, right? So when we're talking about the protocol level, there are a couple of aspects here. One is running a node. This is the decentralized system that is enforcing the rules and validating that miners are producing valid blocks and that the transactions that are going around the network are valid. And the first thing here is that there are threats to the nodes, to node runners. And the thing is, you need to just make sure that you can keep your node up to date. You can make sure your node can access the network. You're not getting attacked by any of the hypothetical things that are out there. I go down in the whole threat landscape in chapter 9 of defending Bitcoin. Then the next thing is the miners themselves. And miner decentralization is a major issue right now. Foundry, the pool Foundry, has over 30% of the hash rate at the moment, and the top 3 pools have about 60% of the hash rate between them. And so the thing is, if you get 51% of the hash rate, you can do things like censored transactions. You can do things like reorganize the chain. Double spending becomes a possibility. So in the scheme of things, we really don't want one entity to get 51% of the hash rate. But even with 30%, 40%, someone like Foundry would be able to do reorganization or something like this if they wanted to. There's even evidence that they did a small reorg a few months ago. They invalidated a block another miner found with 2 of their own. And so we already are seeing that mining decentralization is a big problem. So one cool thing that's starting to happen is that renting hash rate from providers such as Brains or NiceHash, there are others. You can simply go get some hash rate and point it at a pool that isn't Foundry, isn't one of the big ones. I'm a big fan of Ocean because they let you build your own blocks. Everyone who is simply giving their hash power to a pool, and the pool decides who's making the block, well, you're really just a hash salesman. But if you make your own blocks, if you make your own block templates, no one can tell you what to do there. You're the one decentralizing the network. Ocean makes it really easy. There are other pools, but yeah, this is one of the easiest things that say an average pleb can do to get involved with the network is just buy some hash rate, point it to Ocean with your own datum server and build your own block. So that's something really actionable that I encourage everyone to do. You can also use Bitcoin to heat your home. I have a couple of Bitcoin heaters at home when it's cold out. It's not cold right now. It's not super cold right now in Finland, but it gets pretty cold in the winter. And I know tons of parts of the States and Canada that get really cold in the winter too, so you can heat your home. There are Bitcoin boilers. That stuff is really cool. There's district heating systems. That's on a whole nother level, but we have a lot of that here in Finland. So just get involved in the Bitcoin mining game and try to point it to a pool that lets you build your own blocks. Again, Ocean is my recommendation, but I hope for more pools. Just like I don't want any one. Sorry, I'm sort of skipping ahead here. I don't want any one mining pool to have more than 51% of the hash rate. I also don't want any one node implementation to have more than 51% of the share. Decentralize everything in Bitcoin. That's the way we keep it secure, and that's the way that we keep it available for everyone.
Got it, Luke. Okay, I've been seeing. I'm gonna hit on what the chat's been talking about. I've seen a couple BIP110 stuff. Is this a realistic way of defending Bitcoin? Is the conversation, has it been, diluted on Twitter? I feel like now we're getting to just like back and forth. No one's really listening to each other anymore. So what is your view after writing a huge book about it? Is BIP110 a legitimate way to defend Bitcoin and maintain the core principles that kept Bitcoin, or rather that will maintain Bitcoin going into the future?
Okay, I'll keep this short enough. I don't think that the BIP110 fork, proposed soft fork right now, is going to activate in a way that is going to be non-controversial, and therefore I'm not currently supportive of BIP110. I am going to caveat that with I support the efforts of BIP110. I support all of the technical changes it seeks to put in, with some caveats. I think they might have overstepped in a couple of areas. It's better to not break things if you can avoid it. And there are some things that would get broken, at least temporarily, by BIP110. But that's not the reason for my position. In writing this book, I wrote 2 chapters, one on arbitrary data and why that is a security problem. And that's my take as a security professional, that arbitrary data is basically a DDoS. It's basically an availability attack. It's making the system less available for monetary transactions. So I don't think it's good. I don't think the protocol should go out of its way to support arbitrary data. Then I go into all of the issues with governance. Now you might have seen that Hodlonaut, the space cat on Twitter, has been putting out a series of articles about governance issues in Bitcoin Core, and I really do think there's a problem there. Now I've talked to people on both sides of the table here, Bitcoin Core devs. I've talked to tons of plebs. I was just at BTC Prague, for example, and there are so many people supportive of BIP110 and who want to see this thing succeed, who are running BIP110 compatible nodes, things like this, signaling nodes. But I do have an issue with the idea of taking Bitcoin down the road to a potential chain split. There's tons of chaos that can happen there. The fork wars the block size wars back in 2017. I mean, no one could have predicted that it would go down exactly the way it did. I'm writing a book about risk management. I wrote a book about risk management, and the thing is, the risk of things not going the way people might hope is not worth the squeeze, so to say. So I advocate for more conservative methods of defending the network, such as supporting third-party implementations. There are a few that are popping up. There's libbitcoin that already exists, although that doesn't relay transactions. There's production ready by Samsamo and Jimmy Song, which is planning on building another implementation based on Core. So those are some ways, and also mining decentralization just solves the problem, right? If you build your own block templates, you can just not choose to put spam on the chain, right? And you can always do that. That's always been an option. And even if Bitcoin Core is choosing to remove some of the filters, that doesn't mean that you as an individual can't make decisions not to relay those transactions and not to put those into your blocks. So I'd advocate that you, first of all, just really do your research. And if you choose to be supportive of this fork, just be fully eyes wide open what you're really getting into here. There are a few outcomes to this, and really the big bad option is that there's a prolonged chain split, whole new coin, something like this, parts of the network entirely fall off. And we're really fragmenting ourselves. I would really prefer to focus on external regulatory issues, bringing more people into Bitcoin, right? It may not be perfect, and there may be things that we want to do to make the network better as a monetary system, but I always just want to bring more people onto the network and make sure that they can get into the whole system of self-sovereignty and out of the fiat oppression that we're looking at. So that's why BIP110 isn't my focus at the moment. And just to sum up, I don't think it's going to activate. I think it will signal to activate on the date, but it's not going to get enough hash rate to do anything. And those who are supportive of it are going to abandon it. That's my prediction. I might be wrong. And if BIP110 successfully activates, I will be happy at the outcome. But it was a large risk, and I don't think that we're going to do it without quite a lot of people being really unhappy. So,
well, Luke, I think that's the first time I've heard someone say the whole controversy or the whole debate where it made like a lot of sense to me, and it wasn't just a bunch of hyperbolic examples of things. I was like, oh yeah, okay. I mean, that's kind of been my gut feeling here, but I'm more of just the propagandist here. You know, when they get to the technicals, I'm like, I tried to be a dev. I tried to understand things more in depth, and I was like, it's above my pay grade. So I'm glad we can bring the experts on today and talk about it. Now, Luke, again, I don't mean to, just keep moving through topics here, but I did see the chat ask about quantum computing. How big is the threat of quantum computing in Bitcoin? If you've been in Bitcoin for a while, we know that eventually it might be a threat, but we have seen a lot of FUD around quantum computing in the last year. So from your perspective as the defending Bitcoin researcher, where do we currently stand with the quantum computing and the quote, upgrades that we will need to do for Bitcoin? Like, what's your view on just quantum in general here? And someone asked if there's like a quantum computing wallet or a quantum computing proof wallet. I don't think we're there yet, but okay. So let's just start with the quantum, I guess, general conversation, and then what we will eventually have to do, because I think it's an eventuality, but I'm personally like, I don't think we're there yet. But we've seen a lot of FUD, like 3 years, it's over, guys. If we don't do it now, Bitcoin's broken. And I'm like, yo, I don't know. I look at your guys' investments. It seems like you guys are invested in quantum companies. So look, call me suspicious, but anyways, rambling enough. Luke, where are we with quantum? Should the Bitcoiner that's watching right now be as worried about quantum as the hype that we've seen in the last year?
Sure. Well, quantum might be a big deal, and it might not. That's a joke. Okay, but it's actually pretty true. The thing is, the physics behind quantum haven't been proven in real life. Theoretically, there is a set of circuits that can break the SHA-256 encryption algorithm, right? With Shor's algorithm, that's the mechanism that would do that. But the thing is, we don't know if it's going to even be physically possible, or with the resources of even the nation state, that they're going to be able to put together a quantum computer that can do this. Google and others are saying it's only a few years, but honestly, they've really got to back that up for that to be the case. And there's also a couple of other things to keep in mind, right? If one quantum computer is able to crack one key, that doesn't mean they're going to start cracking all the keys immediately. Like, it's a time-intensive procedure, right? And there's all this talk about Satoshi's coins, right? It's not like Satoshi has them all in one address. They're in chunks of 50, right? They're in chunks of 50, like all over the network. So it would take ages to sweep Satoshi's coins, right? This mechanism. And that's the other thing too, is that you, the individual Bitcoin holder, if you ever heard, like, if you're being chased by a bear, you don't need to outrun the bear, you just need to outrun the slowest person, right? So the thing there is that there are going to be targets ahead of you, the addresses that have a ton of Bitcoin in them, and the addresses that are in these old legacy address types that are quantum vulnerable. And they're quantum vulnerable because they expose the private key without being, sorry, that would be bad. They expose the public key. They expose the public key before being sent. It's just their part of the address, right? Now, the best address type to be using right now is SegWit, because SegWit naturally hides the public key until you spend from it, right? And SegWit has just all of these other improvements from a long time ago that are just better than the original legacy address type. So SegWit is the one to use if you're afraid about quantum. The trade-off here, right? Taproot is supposed to be the big new address type that gives things like privacy improvements, but it does expose the public key. So there's actually a trade-off here. We talked about privacy originally. I could have said use Taproot addresses as part of the privacy measure, but the thing is, if you're looking at the entire picture here, the privacy improvements from Taproot might not be worth the quantum risk. You have to think about that. So SegWit is the way to go if you want to be the most secure against quantum at the moment. Now, there are, we mentioned a couple of proposals. There's a few of them out there now. There's this BIP360, which is pay to Merkle tree, I think is what it is. And it's a way of doing Taproot in a quantum safe way. But the thing is, the transactions are way larger there, right? And so there's a lot of trade-offs with quantum safe addresses. There's another one by Blockstream called Shrinks, I think, and there's that acronym stands for a bunch of things. I'm sure there'll be more protocols. There's a theoretical way to do quantum safe addressing now, but it's really complicated and it takes a lot to do it right. So yeah, the thing here is that quantum might never materialize, but being ready is what we should do. It's the same thing as before with BIP110. You don't want to aim for the worst case scenario, right? You want to prepare against that. And so, looking into and supporting proposals to bring quantum safe addresses onto Bitcoin, that's one thing you can do. Using an already quantum safe address system like SegWit, that's another thing you can do. Just make sure that you're not using these address types that are already insecure. And this is where address reuse comes in again. By the way, if you spend from a Bitcoin address, the public key is revealed, and so if you send more Bitcoin to that address, they know your public key. And it's a system called harvest now, exploit later, right? So they're going to be able to grab all the public keys visible on Bitcoin, and then eventually, when someone gets a quantum computer, they can go mine against those, right? So yeah, is this ever going to happen? I have no idea. Is it going to be a thing in 10 years, 20 years? Yeah, that timeline seems likely if it's ever going to happen. Do I think it's 3 years, 5 years from now? No, but I could be surprised. And you're right. You're exactly right that it seems like people with exterior financial interests are the ones pushing the quantum fund the hardest here. And it's completely wrong that there aren't Bitcoin developers working on this stuff. You can't just go force a developer to go work on something they're not interested in or they're not good at, right? I'd rather have a Bitcoin developer that's interested in the quantum thing and knows the cryptography and knows how to do what they're best at. It'd be working on that problem, and there's more than a few of them that are working on this stuff and trying to keep us safe. So in the long run, so I cover both quantum and AI with the last chapter, defending Bitcoin. And the thing about both of those is they're threats that are emerging. We don't quite know the entire extent of it. AI is already here, but the exact extent to what it's going to be on Bitcoin, we don't know that yet. We don't know that for quantum either. And so I cover both of those. And the thing is, the picture here is let's be prepared, but the sky isn't falling. Not yet, maybe not ever.
Love it, Luke. And someone in the chat said, what is considered an old coin? I think they meant like, or maybe you said old coin, but I think the best example of this is if your Bitcoin address starts with a 1, you're probably going to be quantum, not quantum proof, if that's the way to put it. And a SegWit, for those that aren't as technical, is BC1, right? When your address starts with BC1, it is SegWit, and it's most likely quantum proof. Well, I wouldn't say quantum proof, but you won't necessarily be as vulnerable as if your address starts with a 1. So I'm breaking it down for the 42 IQ people like me in the chat here, okay? So recap, if you're sending Bitcoin to a 1 address, you might want to send to a BC1 address, okay, guys? A last question, Luke, because we have been going for a minute. I'm personally, I think in the last year or so, maybe we're getting closer to 2 years, I think one of the biggest things that I think most concerned, again, I'm not the most technical guy here, but I think there's another angle, and I'm pretty sure you're going to touch on it in the book, but it is kind of going towards, you said regulatory, defending Bitcoin. I would say defending Bitcoin from the politicians. So where do we stand here, and what can the average person do? Or rather, are you concerned about maybe, of course, here in America, like Washington, D.C. co-opting Bitcoin, but we'll go any nation state co-opting Bitcoin, and I'll go further, Wall Street co-opting Bitcoin, and then we'll wrap up today's show. But man, Luke, thank you so much. I think the audience is loving this. So where do we stand with these two topics, and what is your view on defending Bitcoin from outside forces that might be trying to co-opt us?
Yeah, thanks a lot, Opti. And yeah, thanks again for having me here. This has been a lot of fun. Well, so the thing about regulatory political pressure here is that it's different in every jurisdiction, right? And so depending on where you are, you have a different landscape. Here in the EU, it's a lot different from you guys in the States. The situation in Canada is a lot different. I was again in BTC Prague, and the last panel of the conference that I moderated was all about how do we build a stronger Europe. And I mean, the thing there is that there are so many systems that are trying to pull everyone apart and just increasing the surveillance. Eric Kayson puts it super well, like the panopticon, right? This massive surveillance machine, it just keeps going and going and going. And so the thing here is that opting out is the main thing you can do here, right? Pulling your energy from the system. Jeff Booth talks about this all the time, and just getting yourself out of fiat and taking your energy out of that system takes away the control that they have, right? So move your energy into Bitcoin. But the other thing is we have to live in the real world, right? We have to live in these places, and resisting tyranny, resisting ways that coercion can be used against all of us. That this is major stuff. I mean, whenever you hear about legislation that tries to increase the surveillance or increase government control, just in the UK, they're announcing that under 16s aren't going to be allowed on the internet,
Yeah.
social media, which means everyone's got to prove they're older than 16, and so that's just a big sneaky government control kind of thing. I kind of envy you guys in the states for a lot of the rights protections you guys have, but at the end of the day, there's a lot of ways to be coercive in the financial system, right? Now, a practical thing, and this might not be like a super popular idea, but getting a second passport is just one defense against regulatory measures that might not be super nice, right? If you have a second means of getting out of your country, if you're targeted for some reason, or there's legislation that you just absolutely can't live with, having a second passport that you can use. I mean, there are a lot of plans, especially for people in the states, if you have ancestry from a handful of countries, where you can go get citizenship through ancestry for that country, right? Something I highly recommend. I'm basically going and doing it and getting an EU passport, which might not sound great, but compared to a Canadian one, I think it's a pretty good step. And then the whole thing with you basically just buy another passport from a Caribbean island or a bunch of other places, right? So yeah, at the end of the day, just resisting politically is one thing, but there's only so much you can do in a democracy and a democratic system. And advocating for you, your friends, your family to just opt out, get out of the system, and have backup plans. Like everything else, have a backup plan. So that's this Plan B passport system, which I talk about. Just have options. And so it's not perfect. The world is in a pretty crazy place. Clown world is a good word for it, and we're really trying to fight that here as Bitcoiners, right? Fight for our sovereignty, fight for our freedom, and I'm optimistic in some ways, in a lot of ways even, but it is definitely going to be a fight, and the political regulatory fight is something that could go for the remainder of our lifetimes. And I'm just hoping that Bitcoin can suck enough energy out of the system that it can no longer cease to function as a tool of oppression.
Yeah, I couldn't agree more. I was going to cut off, but let's do institutional capture. One last thing, and then we'll plug the book for everyone. But what's your thoughts on institutional capture? I've been saying, Wall Street capture just because we're in America, but we'll go institutional capture as a broad statement of the concern of maybe the centralized control of millions of coins in, corporation wrappers around Bitcoin. So what's your thoughts on that? And then we'll plug the book and we'll wrap up today's show.
Well, look, the whole thing here is that Bitcoin is a permissionless system, right? And this might be a little unpopular, but it's permissionless for them to do all this stuff too. You know what I mean?
Right?
They're free to just buy Bitcoin and do all this financial derivative stuff with it. And I mean, the ETFs exist. You can't stop them, right? The only thing you can do is not give them your money, right? All you can do is not buy an ETF. All you can do is not buy MicroStrategy or Stretch or whatever it is, and just buy Bitcoin instead. Take it to self custody. That's how you resist that. And so if you have a problem with it, that's literally the only thing that you can do, right? Because and it's the same thing with the BIP110 stuff. Like we can't 100% stop arbitrary data on Bitcoin, and I am not advocating for doing nothing. I'm absolutely not advocating for doing nothing. But I do understand that it is a permissionless system, and that's by design, and that's a good thing, right? I'm more in Bitcoin for its monetary properties, but the thing is, I want to have a decentralized network that makes it so that you can't make a 21 million and one coin. You know what I mean? Like defending the monetary properties of Bitcoin is only possible because we are truly decentralized, and that makes it a permissionless system where someone can go and put monkey JPEGs on the chain if they want. Now, I would love to reduce the ability to do that, but people are creative, especially people with malicious intent. Same thing with these Wall Street people. They're the same exact thing. If they're using Bitcoin in a way you don't want them to, right? The way you can resist that is by taking your Bitcoin into self custody, so they don't have that to play with. And you can always advocate for other things. There's proof of reserves, which may or may not be a good thing. It's definitely not a smoking gun, right? But it is better than nothing to have some kind of proof of here are the coins you have, and that they do in fact hold them. But at the end of the day, there's going to be paper Bitcoin and institutional Bitcoin. There isn't anything we can do about it except not giving them your money. So that would be what I would suggest to do.
Luke, full circle on today's show. I started the show with that. We're going to end the show with that. Guys, if you are interested in what Luke has been telling you and you want a deeper dive into it, go to defendingbitcoin.com. And like Down Under Blues and Winsome have been saying in the chat, guys, if this is the first time you're hearing all of this stuff, do not go out there and panic. Take this calmly. I don't think anything we said today is on the verge of you have to do this now. We are doing the opposite. We are making you aware of this, and then sit down calmly once you understand the information, once you understand the process. Go out and do the best you can so that you can not only defend your Bitcoin, but defend Bitcoin at large. So, Luke, thank you so much for coming. Actually, at this point, do you need to do the 2-minute plug on what defending Bitcoin is? Do you want to do the 2-minute plug on it? Or just, guys, go to defendingbitcoin.com. As you can tell, Luke, I would say, knows what he's talking about. And for everyone that says we never talk about these topics, we did. We do, and we just did, okay? So, Luke, thank you so much. That was actually awesome for me personally. Obviously, I've been in Bitcoin for a long time. You've been in Bitcoin for a long time. What we have seen on Twitter in the last year or so, maybe because of the peak bear market that we're in, because we didn't go as high as we thought we were going to go, there has been a lot of, muddying of the conversation. And it seems like we're seeing more and more fragments grow on Twitter, and no one's really having the conversation. So, kudos to you for writing the book and coming on the show and having this conversation for our audience. So we really appreciate it.
Thanks so much, Opti. And I wanted to leave Bitcoiners and everyone who reads this book with practical tools how to make a difference. And I want to leave you empowered. That's the conclusion of the book. There's always something you can do. And Bitcoin is strong because of all of us. So defend your Bitcoin, defend your money, defend Bitcoin.
Let's go. All right, guys. Well, that's what we got for you today. A little longer show, but hey, I made sure you guys got the information from, I would say, more of the Bitcoin expert than me. Again, I'm the propagandist. We bring Luke on so he can tell you about the technicals, how you protect yourself. So guys, again, don't panic. Maybe go out, get the book, read it, understand what's going on. But let's just end it with what Luke said. There's always a way to defend your Bitcoin. It's possible, and I guess that's the first step, guys. It is possible, okay? Let's not get into the defeatist, pessimistic fields area here. We can actually take back our power here, and it does start with Bitcoin. So again, Luke, thank you so much, guys. I will catch you on tomorrow's show. We'll be back for another day of Simply Bitcoin. Peace out.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.